Hi all and welcome to TCM Education. In this video we want to discuss a more philosophical theme. What are the odds of winning in day trading? Or what is the math of winning in day trading? The answer is clear to those who never traded. They know exactly what the odds are, and the odds are against you, and the house has the odds, meaning there is no definition who the house is, like maybe Goldman Sachs is the house, maybe the New York Stock Exchange is the house, but everybody that doesn't know anything about day trading or never traded has an opinion. So that's a very negatively opinionated, let's call it a crowd against day traders. Now let's and most of them of course compare day trading to roulette, and let's explain why it's not roulette, and then move from there. So for those who don't know what roulette is, and I'm sure that 99% know what roulette is a fixed odds game. If you play American roulette, the odds are 47-53 against you. If you play European roulette, the odds are 48-50 versus 51-5 against you, because in the American roulette there are 2 zeros, and in the European roulette only 1 zero, and the zero means that you lose. So the house takes everything, all the table, and other than that the odds are 50-50, and it's a super exciting game for those who love it. And the odds are clear from the get-go. The average play time, and I'm going now to Chatgpt, the average play time in roulette between draws is typically 1 minute. So you can play roulette 60 times per hour, and let's say you bet a fixed amount per bet. The odds are over a long period of time that you're going to lose money, and that's why casinos are, or casino owners are doing very well. So that's regarding the odds in roulette. So that's something that's clear, and let's move on away from roulette and into our world of day trading. So now let's talk about what are the odds of winning a trade. Being that I've been trading for almost, I'm ashamed to say 20 years, I cannot answer this question. What are the odds of making a trade? Because first of all, what is the definition of a good trade or a winning trade? If you buy a stock at 20 and sell it at 20 and 10 cents, is this a winning trade? And maybe a winning trade is defined by 10% move, or by 0.01% move. So who makes the decision what is a winning trade? So there is no winning trade. And what is the risk on the trade? Again, who's making the decision what is the risk on the trade? There are no guidelines here. Everybody can do whatever it feels like, and that's the beauty about overall investing. And now we're going to go to a smaller niche, or very smaller niche, and not talk about investing, and talk about only day trading. And again, if we move to investing, that's a long odds game, and in a long odds game you can either lose all your money or make 10,000% out of it, or I don't know, maybe even 50,000% out of it over 10, 20, 50 years. So again, now let's go back to our philosophical question: who defines it? What is a winning trade? And this is tough, because everybody, if we'll ask 100 traders and even 100 persons that are observants, professors, shopkeepers, taxi drivers, everybody has an opinion here. But what is a winning trade at a philosophical level is that whatever you designed it to be, and again the design can change at any second. When you roll the dice roll the ball or spin the roulette, the odds are fixed. You cannot once it doesn't matter when you spin, the odds are fixed. Okay, they are a little bit against you, but they are fixed. Now when a trade starts and when you enter the position, this is where the game starts. And let's say you decided that you're going to buy 1,000 shares at $20. So that's $20,000, a position worth $20,000, and you want to risk 1% on the trade. So 1% of $20,000 is $200. So you have a drawdown of 20 cents, and let's say that by the time the stock moves down to 18 cents, you cancel the stop loss and you move it down to 40 cents. And then when it goes down to 40 cents, you draw down, you increase the drawdown, and then the stock starts to move up and ends up the trading day up 5%. So is this a successful trade? Is this a winning trade? And again, this is managing or running the downside. What happens to the on the upside of this event? So the stock breaks 20, and you decided that you want to take a 50-cent profit on the trade, and the trade is 200 shares. So meaning you're set the limit of the target of $100 as the profit. But what happens? Is it $100? 200 times, yeah, $100, I think. Yeah, $100. Okay, so the target is $100 on the trade. Okay, now what happens next? You cancel the target. You see that the market is moving up. You have a change of mind, and you decide my new target is $1 in the money. So in this case, $1 is 50 cents away. So the stock moves up 95 cents, doesn't reach your target, and then starts dropping and drops the whole dollar and then more. What happens then? Is this a winning trade? Is this a losing trade? So again, it's super complicated even to run a bunch of trades, because everybody thinks different. There are thousands of stocks and an infinite amount of scenarios, while in roulette there are basically two scenarios. Let's exclude three, including the zeros, but most of the time you have two scenarios. Either red or black. In day trading, you have an infinite amount of scenarios that a day trader needs to deal with. Now, what is the smart way to deal with trading? Assuming there is a smart way. First of all, you need to assess your risk on every trade and stick to your plan. Sometimes sticking to your plan can result in a loss, and sometimes the changing your plan can result in a winner, and that goes on both sides of the market, like the way I explained a couple of minutes ago. So how this all fits into the math of or trying to answer this super complex question. What is winning a trade, and what is the math of winning a trade? I'm not talking about swing trading or investing, just talking about day trading. So limiting the scope to 6.5 hours of trading between 9:30 in the morning and 4 p.m. So just to make things which are already so complex, very, very simple. And again, the math depends on so many factors that it's, I don't want to say impossible to figure out, but I'm sure that there will be those, I guess, AI geniuses that will try, and if they'll be able to to conquer it, there's lots of money in this business for them. Now, who's making overall the big money in trading or day trading versus investing? Of course, if you have the patience and funds available to you, the same Goldman Sachs and JP Morgan and Warren Buffett have, and the markets are making or basically moving higher since World War II, that's 1945, so 80 years of prosperity. There are drawdowns in this period, but overall the market didn't go from hero to zero. So let's say the drawdown was at 1.70 or 75%. The strong hands prevailed, and those guys made thousands of percentages return on their money. This is not a case in day trading. Day trading is basically a job. So you cannot compare day trading to investing, and you, a day trader, a small-time day trader having a capital of, let's say in the US, $40,000 on average, or maybe, let's say 40 in the rest of the world, anywhere between 5 and 10 max, let's say 10. It doesn't even compare to the funds available to the big investors. Now you need to make money leveraged, which is perfectly fine. There's no problem with that in day trading, but you need to make money because you're working. Now there are, of course, those guys that post those super crazy ads like I'm making $5,000 a day every day, come check out my method. Yes, it's possible that you can make $5,000 a day every day. Of course, they don't specify what is their capital, but you cannot make it consistent. It's not a consistent thing. You can make $10,000 maybe one day and lose 5 the other day, make 3, then make 5 again. Consistency is a tough job when it comes to day trading. It's not a printer, okay? But it's not a constant, the same trades are coming your way every day. One day you have the market moving up 2%, the other day the market is not moving at all, then the market is moving in one day up 1% and losing the whole 1%. So the scenarios, like I said, are infinite, and I would say that if we want an equivalent of day trading, I would say is a restaurant, where over the weekend the restaurant is packed, people are coming in buying booze and steaks and having a great time and spending with friends hours in the restaurant, and the average bill per person is, let's say, $50 or $100, while during the weekend, the weekday, people are coming in and ordering coffee and pie. The average order is $5. They spend 10 minutes and the restaurant is empty most of the time, which means you can lose money. There are days where a restaurant loses money. The same day, the same format like a day trader can work and lose money. A restaurant can't work, I mean the owner of the restaurant or the company, and lose money on a given day, but overall they are in the business of making. So let's think about that, and we'll come back with the second part of this video tomorrow. Thank you guys. Please share, subscribe, and we'll see you next.